If you're under 40 and don't already own a home, the housing market may be quietly locking you out for good. And according to billionaire investor Peter Thiel, this isn't just a housing problem. It's a massive wealth transfer, and younger Americans are on the losing side. While politicians argue and headlines scream about interest rates, something far more dangerous is happening under the surface. Home prices have exploded. Wages haven't kept up. And the people benefiting the most are the ones who already own property. Thiel says if this continues, the U.S. faces a real estate catastrophe, one that permanently reshapes who builds wealth in America. And there's one number in the data that explains why this keeps getting worse. We'll get to that in a minute. Peter Thiel isn't talking about a short-term housing dip or a bubble popping. He's pointing to something structural. Housing supply is what economists call inelastic. That means when demand rises, supply can't respond fast enough. Here's the shocking part. In many major cities, when the population grows by about 10%, home prices can jump 50% or more, even if wages barely move. That's not growth. That's a wealth funnel. And it pushes money toward the people who already own land and away from everyone else. This is where the wealth transfer starts. But the data makes it impossible to ignore. Let's talk statistics. According to the S&P CoreLogic Case-Shiller Index, U.S. home prices are up over 50% in just the past 5 years. That's one of the fastest increases in modern history, but incomes didn't grow anywhere near that fast. So what happens when prices soar faster than paychecks? Buyers get pushed out, renters get trapped, and housing starts consuming a larger share of monthly income. And whether you rent or want to buy, you can't escape housing costs. This is where Thiel says the system breaks down. Remember that number I mentioned earlier? Here it is. The U.S. is short between 3.8 and 4.5 million homes. That's not a typo. Millions of homes that simply do not exist, especially in the cities where people actually want to live and work. Why? Restrictive zoning laws, local opposition to new construction, long approval timelines, and high regulatory costs. So demand keeps rising, but supply stays stuck. Prices don't fall, they compound. And this is exactly why young Americans are falling further behind every single year. This is where Thiel's warning gets uncomfortable. Older homeowners bought decades ago at far lower prices, watched equity explode, benefited from rising rents and asset inflation. Younger Americans entered the workforce during housing inflation, face higher down payments, spend more on rent with nothing left to save. Homeownership rates for Millennials and Gen Z lag far behind previous generations at the same age. And because housing is the biggest wealth building tool in America, this gap compounds over time. Thiel calls it a structural inequality baked into the system. Here's the part most people miss. Even when the economy grows, even when GDP rises, housing can still break affordability. Because growth doesn't benefit everyone equally when land is scarce. Instead, GDP growth gets capitalized into higher home prices and higher rents. And unless supply expands meaningfully, the next decade could look even worse for first-time buyers. Let's bring this back to real life. If you're trying to buy, expect competition to remain intense. Look closely at cities with more flexible zoning. If you already own, rising values are a benefit, but they come at a broader cost. If you're renting, housing may remain the single biggest pressure on your finances. This isn't fear, it's math. Peter Thiel's warning isn't about a crash tomorrow. It's about a slow-moving catastrophe where the ladder of home ownership is quietly pulled up behind one generation. Housing has become the dividing line between who builds wealth and who doesn't. And unless something changes, this divide may define the next 20 years of American life. I want to hear from you. You think housing in America is fundamentally broken? Or can supply and policy changes still fix it? Drop your thoughts in the comments. I read every one. And if you want more deep dives like this on wealth, real estate, and markets, subscribe so you don't miss what's coming next.